A mission costing 1 crore, that is 10 million, is expected to run for 10 years. At the end of this period, its scrap value is likely to be 900,000. Repairs during the whole life of the mission are expected to be 1.8 million, 18 lakhs, and the mission is expected to run 4,380 hours per year on an average. Its electricity consumption is 15 units per hour, the rate per unit being 5. The mission occupies 1/4 of the area of the department and has 2 points out of total of 10 for lighting. The foreman has to devote about 1/6 of his time to the mission. The monthly rent of the department is 30,000 and the lighting charges amount to 8,000 per month. The foreman is paid a monthly salary of 19,200. Find out the mission hour rate, assuming insurance is 1% per annum and the expenses on oil, etc., are 900 per month. So here we have various costs that are associated. We have to classify them into fixed and variable, total them, then divided by the number of hours so that we can have say mission hour rate. First of all, let's calculate what's going to be the depreciation here because the mission is getting used. So let me take you through this note 1. We know cost of the asset is 10 million, 1 crore, residual value is 900,000, 9 lakhs, so depreciable value is 91 lakhs, 9.1 million. Useful life is 10 years, so annual depreciation is simple. 91 lakh divided by 10 years, it's 9 lakh 10,000, and if we can divide it by 12, we get the monthly depreciation. Okay, and this should also get into the mission hour rate calculation. And we also know by reading the question that this mission will work for 4,380 hours in a year per annum, and if you can divide it by 12, you get monthly hours. Fine. So now let's get into the calculation. Yeah, here we have. First, let's find out the fixed cost standing charges. Depreciation, what we have calculated now per month is 75833.33. Then we have rent. As far as rent is concerned, question says 1/4 of the area of the department is occupied by the machinery. The rent that is paid is 30,000. So 30,000 into 1/4, 7,500 per month. Then comes lighting charges or 8,000 per month, and this machine takes 2 points out of 10 for lighting. So 8,000 divided by 10 points multiplied by 2 points, 1,600, right? Then there's a foreman salary of 19,200 and foreman spends 1/6 of his time to the mission. So it's going to be 19,200 divided by 6 or into 1/6, so we get 3,200. Then there are some sundry expenses like oil, which we have noted, 900. Then insurance, we are taking the depreciable value of the asset, which is 9.1 million. Multiplied by 1%, we get per annum depreciation. Dividing it by 12, we get monthly insurance. Okay, so here a small correction, I said per annum depreciation. I'm sorry, it's depreciable value multiplied by 1% gives per annum insurance. Okay, divided by 12, we get monthly insurance, and this is the total standing charges, and this is per month. Already we have calculated what is the monthly hours. It's 365, right? So if this is divided by 365, this B27 is nothing but 365. We get per hour fixed cost is 264.7. Then there are variable costs. One is related to repair, the other one is electricity. Repair, we have in the question that the total repair cost is 1.8 million, 18 lakhs. That's for an entire 10 years. Per annum, it's 4,380 hours. So for 10 years, it's going to be 43,800 hours. And for that, what we are spending is this 1.8 million. So 18 lakh divided by 43,800, we get repair rate per hour 41.1. Then comes electricity. Regarding electricity, we have the information that electricity charges. What is the electricity charge? It's somewhere here. It's going to be 5 per unit and will be consuming 15 units per hour. So it's going to be simple. Electricity is 15 units per hour multiplied by charge per unit, which is 5. So I think this should be corrected. It's 15 units per hour multiplied by 5 per unit. So it's going to be 15 into 5, 75. So if we can add all this, we get to know what is the mission hour rate, which is 380.80.